to join. Okay, there we go. So we're on rule number 4. So for those who are not here, rule number 1 was basically staying disciplined. Rule number 2 was an elaboration on rule number 1, an emphasis to be disciplined each and every day. The market is going to reward you for being disciplined. Understand? And rule number 3 was basically a caution about your lot sizes that you use when you're trading. You must try to lower them. Make sure that you lower them. So now we're on rule number 4, and we're only going to be focusing on 10 rules on this session. So on rule number 4, we have never turned a winner into a loser. Now this comes with being greedy. If you know that you have a sense of greed within you from time to time, then this rule you should really follow. It applies to you. These rules are going to help you to be profitable. Never turn a loser into a winner. You can make one trade right now into Nasdaq 100 and you see Nasdaq 100 spiking up. It's spiking up, like it's spiking up really good. The volatility is good. The momentum is also there. It is spiking up. We get that. And now because you are greedy, you're going to open maybe say 2 more or 3 more positions, or maybe with also a higher lot size on that position, so that you also go up with the trend, and then it ends up fucking you. Sometimes you're gonna win, I'm not gonna lie, I've also done it myself, but sometimes you're gonna win, but then sometimes you're gonna lose, and those sometimes are gonna fuck you up, are gonna fuck your account up. So never turn a winner into a loser. If you see that the trade is winning, let it win. Be disciplined and stick to the plan. Let the market reward you for your discipline. Don't turn that winning trade into a losing trade. If it's one trade, it's fine. The market is not going anywhere. The market was there probably way before you were also born. It will still be there when your children come to pass and you teach them how to trade. It will still be there. There will still be more trades to be taken. Stick to that one trade, stick to the plan, be disciplined, and don't turn a winner into a loser. Understand? So now we move on to number 5. Oh, guys. Oh my gosh. Number 5. It depresses me. Like, I'm looking at it now, and it's not something that I would say nobody does. It happens to the best of us. It happens sometimes. Your biggest loss cannot exceed your biggest winner. Your biggest loss cannot exceed your biggest winner. You need to keep a log, you need to keep a diary of all your trades, and you need to be recording your trades. That on this day you took a particular trade and this is how the trade turned out. You need to keep a record of all those trades. Now, when you have that record, you must reflect on it from time to time, say weekly or monthly. Now, if you realize that your biggest loss exceeded your biggest win, then you have a problem. It means that the first 4 rules are not being adhered to. There comes a time whereby you need to realize or really accept it to yourself that, you know what I did was fucked up. And when this happens, then what you did is fucked up. Whatever strategy that you're using is fucked up. Whatever plans that you're making, they're fucked up. Whatever trading plan that you are going with is fucked up. Because if your biggest loss exceeds your biggest win, then that means you're not lowering your lot sizes. You're not being disciplined within the market. You need to remember that you're supposed to be risking less to make more. So that means on a particular day, you decided to up your lot size or up your leverage on your account, and that led to your biggest loss, exceeding your biggest win. If that happens, then that is the breaking point for the way that you're trading. You need to change your ways. Make a record of all your trades, and when you feel and see on that record that, okay, my biggest loss exceeded my biggest win, then there's a problem with the way that you're trading. You understand, guys? Now we go to number 6. Number 6 is in the lines of planning, of your trading plans and your trading rules personally to you, the ones that would apply personally to you. You know your weaknesses, you know your strengths also. These rules that you make, here's a rule that I'm going to help you understand. Here's a rule I'm going to give you to help you make those rules work. Rule number 6 is that you must stick to your methodologies. You must stick to your methods, stick to your methodologies, stick to your philosophies, stick to your beliefs, and stick to your plans. Don't change them from day to day. If today you have a losing day, doesn't mean you should change the way that you do things. It doesn't mean you should change the way that you approach the market. The only time that you would have to consider changing the way you approach the market is when your biggest loss exceeds your biggest win. That's when you will try and evaluate on how you are approaching the market, the methods you are using to approach the market. But if nothing like that has happened and you had a losing day or a losing week, stick to your methodologies. Stick to your methodologies. Don't change them from day to day. When every day you're busy changing, when every day you're busy changing. Today you're trading with this strategy, tomorrow you're trading with a different strategy. The next day you're trading with the system, then other day you're trading with a different system. You're confusing yourself and you're not sticking to rule number 1, which is discipline. The market will not reward you for that. It will not reward you for that. Okay? So let's go to rule number 7. Rule number 7 is my favorite. I like to believe that rule number 7 is my favorite. With what is happening, Okay, rule number 7. Rule number 7 is my favorite because of how Forex really even made it out into the world, out into us, inspired us. Social media marketing, social media advertising, social media lifestyles, social media presenting how I trade and what I put out there on social media. I can trade with huge lot sizes, one trade. Others can trade with barcode entries, risky sniper entries, also a lot of different things that we will be doing as different people. Now, rule number 7, I stated like this, and I will read it directly to you. Be yourself. Be yourself. Don't try to be someone else. Be yourself and do not try to be someone else. Don't try to be me. Don't try to be the next mentor that there is. Don't try to be any mentor that is out there. Don't try to be your friend. Be yourself. Be yourself when you're trading in the markets. Just because I do barcode entries and it works for me does not mean it's going to work for you. Just because I do sniper entries does not mean it's gonna work for you. It won't work for everyone. What I do won't work for the next person personally. You need to be yourself when trading. After what I teach you, you need to take it in and then take it out with a personal touch. You need to be yourself. That is very important. We are on social media so much. We are influenced so much out there. and we forget to be ourselves. Be yourself. And if barcode is you being yourself, then Bona, do barcode, and I fucking motivate you to do it. I approve of it, and I recommend you to do it. If you feel like small lot sizes are you, then they are you, and you're going to be consistently profiting from that because you're being yourself by staying disciplined also. Be yourself. Now we go to rule number 8. Yo. When we were speaking in the third rule, we spoke about how you should lower your lot sizes. Rule number 8 states you should always be able to come back and trade again tomorrow and the next day and the day to follow. Now, how do you achieve that? By trading accordingly to your account size. Don't trade like today is the last day. Don't trade like tomorrow you won't be alive or tomorrow the market will be non-existent. You need to be able to come back the next day and trade again. As a child, you'd hear they'd say, you must come back and play tomorrow. And for you to be able to come back and play tomorrow, you must go home early. Go home early, do your chores, so that tomorrow you can go back and play again. So now here you need to come back the next day and trade again. So you need to behave. You need to get to your account and put a reasonable small lot size, risk small for big rewards, so that you can come back tomorrow and trade again. Be disciplined so that tomorrow you can come back and trade again. Because the longer you stay in the game, the better you will be. The longer you stay in the game, the more profitable you're gonna be. You don't get any more profitable when you blow. You don't get closer to profiting when you blow. You don't. You really don't. Okay, so now we can move to rule number 9. So these two last rules, they're pretty simple. My battery is low. You need to earn the right to trade bigger. You need to earn the right to trade on a bigger scale, bigger lot sizes. And you can only earn this by your account growing, not by your hunger for more profits. Doesn't work like that. Rule number 10, before this power cuts me out and shit. You need to get out of your losses. If you can see that a trade is really not just going according to plan, you can get out of it. And by getting out of the trade, doesn't mean you should immediately try to look for a way back in. Get out of your losses, go get some fresh air, go chill with your girlfriend, go chill with your friend, go play outside, go do whatever the fuck you want to do, and then come down. Then come back and reanalyze a different pair or a different indice or the same pair. Those 10 rules are really, 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 really vital to you being profitable in the market. And in this next session, we're gonna get to the to 10 more rules that will help you be even more profitable. We're gonna have a session before that session. I'm saying a lot of sessions. We're gonna have a session before that session for more interaction, question and answer for any of the rules. I'll be sharing the video